Today, we're going to be looking at the prop firm Gold Expert Advisor. So this bot has actually been sent to me by many customers of mine who have said it's quite good and it's worth taking a look at. And what's quite unique here is that it's based once again on a real trading strategy apparently, and it is prop firm compatible while also having a higher risk reward. And I find with gold, it's pretty rare that you find a high risk reward bot on the marketplace. Like Wim has done a fantastic job with the Gold Reaper. I've developed a golden longbow, and there are a few different ones which you see from time to time, but it's much more common to see scalpers. So anytime that we see this kind of more higher risk reward system, it's kind of interesting to dive in. And at least from the statistics which I'm seeing, there appears to be a higher risk reward. So I'm curious as to what strategy he's running and whether or not this could be a good addition to the portfolio. So if we look at the actual page here, we can see that the developer is referencing his broader Darwin X portfolio kind of as a track record. And it's pretty impressive. Like, he's been doing this for several months. He seems to have a nice mix, some of which are more like indices based, some of which are more based on currencies and gold. We don't really know if these are his bots or if he's buying third-party ones, but regardless, like actually assembling a very good portfolio is definitely challenging. So the fact that he's doing so with good results is really impressive. And also, if we look at the actual signal for this specific bot, we're seeing that there's not a ton of trades, but so far so good. And when I mentioned high risk reward, if we look at the average loss versus the average profit, there does appear to be a positive risk reward here, which is always quite helpful for prop firms, because I have found through my own experience that really, if you want to pass prop firms, you need to have a positive risk reward, because if you try and scalp your way to it, it just takes so long. Whereas scalpers are actually really helpful in a personal portfolio, because you can kind of balance out some high risk reward bots with some low risk reward bots and kind of build a bit of a diversified portfolio through risk reward, through win rate, through hold time, which give you even a smoother equity curve. But with prop firms, definitely less relevant. So now let's actually dive into the sales page here. And really what he's saying is good, like classic trust building language here, where it's like there's no grid, there's no martingale, it's a real system. Expect losers, which is great. I think this is really something that it's on any trader's journey. Like at the beginning, everybody gets attracted by the sexy grid martingales that like you never have to take a loser until it goes boom. But really part of being a trader is that you know how to take losers, and like best loser win, as Trader Tom says. So all of this makes a lot of sense. He also has a few prop firm specific features like a drawdown protector and a randomizer. But really the part which stood out to me is I'm trying to figure out how he's actually triggering trades. Like, what is the trigger behind this bot? And from what I can see, there's two really good hints here. One of which is that there is a time-based trigger here, specifically because he's saying that if you are using a broker which does not have a standard New York +7 time, you have to reach out to him. So that means that there is some sort of important trigger which is being based on time. And second of all, I'm also seeing that there is a first trade entry delay. And I also saw this in the backtest, that his first trade, I think there's 2 trades a day, but the first one occurs right at the gold market open. So it's almost like an Asian session breakout or an Asian session pattern. And if you read through some of the actual kind of sales page in more detail, is that he's saying that it's using certain intraday patterns and volatility cycles. So there is something in terms of like he's trying to capture natural volatility and natural kind of time-based movements in gold, which is pretty cool. And it's a bit more unique than what you usually see. Like a gold breakout based on like local highs, local lows, like that's been done a million times. Different oscillators have been done a million times too, but like a time-based high risk reward system, which is more based on price action and times, is actually really neat. So I'm curious to see what he's doing. At first, when I saw time, I thought that this has to be an opening range breakout, but it's actually not. And that's why it's pretty cool to kind of dive in and see exactly what he's doing. So here I ran a back test on Vantage using every tick based on real ticks. Let me show you guys the report and the graph. And as we can see, it's indeed a real equity curve. And it's taking a fair amount. It's not like a crazy amount of trades, but 507 trades over the span of a year. So it's like 1 point something trades a day. And if we look at the actual statistics, we do have a slightly positive risk reward with around a 53% win rate. So it's not a super high risk reward bot, but it's also not a scalper. Let me once again move my head so you guys can see what I'm talking about. We look at average profit versus average loss, and we look at the win rate. So overall, it's looking like a pretty solid one-to-one kind of high risk reward bot. And as expected, his first trade is indeed entering really at the beginning of the day. Like if we look at the times here, there's usually 2 trades a day. And if you look at the in, it's pretty much occurring right at the beginning of the day. And then he has a second one, which is kind of entering once the first trade closes, which is actually pretty neat. Oh yeah, wow, that's actually really neat. So, okay, this makes actually quite a bit of sense. So his first trade is at market start, and when the second trade, and when it stops out, there's essentially a stop and release that goes until 18:20 every day, and that would be 11:20 New York time. Oh, that's actually really cool. So it is very much a time-based trade. Pretty much, hey, enter with trade 1 at whatever the market entry time would be, and then once the first trade stops out, pretty much replace it with a second trade, which then goes until 11 o'clock. Okay, that's pretty cool. So like and I think there's actually it's a stop and reverse. So if it closes in profit, it won't necessarily stop and reverse, but if it closes in a loss, then it will. Okay, that makes sense. So it is very much a time-based thing, and there's a conditional logic. He's using a stop and reverse based entry too. So okay, let me assemble my thoughts in a way which is less convoluted. His first trade is pretty much entering at the start of the day, and he's taking advantage of essentially the price action at that time. Sometimes he's going long, sometimes he's going short. So I assume that he's probably trying to like do some sort of trend filter or some sort of trigger to enter long and or short at the beginning of the day. And then what he's doing is that if trade 1 stops out, it's then replaced by trade 2, which then enters for the remainder of the day. However, if trade 1 is profitable, so like here's an example of, let me find an example of trade 1 being profitable. No, not this one, here we go. If trade 1 is profitable, it doesn't necessarily stop and reverse. It can, but it will then enter a little bit later on. So let me see. So that's a stop and reverse, right? This is a perfect example. Trade 1 stopped out, stop and reverse. So you enter at the stop loss of trade 1 with trade 2, then you go there. However, here, for instance, it wasn't as immediate. It waited a little bit because it closed in profit. So it's not a direct stop and reverse. So it appears that if the first trade loses, there's an immediate stop and reverse. If the first trade does not lose, there is occasionally a bit of a wait time to enter trade 2. And trade 2 almost always closes at that 18:20, so that would be 11:20 Eastern time. So it's very much a time-based close and a time-based entry. The only kind of thing that I'm still doubting is that, or not still doubting, still trying to figure out, is that first trade, why is he going long and or short to begin with? So it could be based on some sort of trend filter. It could be based on perhaps a candlestick pattern, or perhaps some sort of like whatever the first green candle would be. That might actually be the case. Let's go down to the M5 and let's zoom over here. So it could simply be he's entering, let me find the first of the day, go. Yeah, it could be based on whether or not the first 5-minute candle is green or if the first 5-minute candle is red. That's a pretty common entry that one would do. So here, for instance, the first 5-minute candle is green, so he goes long. Whereas let's try and find another entry candle here. Nope, it's the wrong trade. Also the wrong trade. I'm trying to find a quick red candle somewhere. Or it could be based on a trend filter. But overall, this is really interesting. So like, yeah, there is absolutely a real strategy here. Okay, nope, wrong one. Sorry guys, just looking, bear with me here. I'm looking for a first candle. Oh no, but then this one is this is also a red candle, and he's then entering a buy position, so it's not bad. Okay, but overall, to sum up, this is a neat strategy. He's doing a time-based entry on the first candle of the day, and there's some sort of filter or trigger which is telling him to go long and or short, either candlestick pattern based or trend filter based or indicator based. And if he stops out in that first trade, he's entering with a second trade through stop and reverse, which actually has a very profitable, it's a very profitable exit. Many people use it. And if that first trade is profitable, I think there's a slight delay before entering in with the second trade, which then ends at 11:20 Eastern time. So this is cool. There's a lot of thought being done here. There is some interesting dynamics. The one kind of caveat which I'd be curious of is, why is he picking these times? So if he's just picking times randomly, maybe there's some sort of, it's a bit less robust. However, because he's entering really at the start of the market, I wouldn't be surprised if there is some sort of fundamental reason as to why this works. And it'd be pretty neat to see, like, maybe essentially, if the market stops out in that first trade, there's likely a probability that it will keep going in that direction of the like inverted, keep going in the direction of the stop loss for the rest of the day. So I think there is absolutely something here. It's really interesting. The only kind of question that I would have is, how did he come up with these times? Why did he come up with these signals? Because perhaps like that would be kind of the million-dollar question. Is it robust, or is it perhaps just kind of data mining? I think it's probably robust, just seeing that it seems to be very well developed, but it's certainly a very interesting bot. So guys, this one looks pretty cool. You never know for sure how it's going to perform going forward, but it's been a very well thought out real strategy, which is always wonderful to see. Hope you guys enjoyed my video. I'll see you in the next one.